Hi, this is Sive Morten with the daily update on EUR+. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the Forex market. Today guys, it probably will be kind of the general report because somehow you could see that very quiet price action on major currencies. So actually we do not see any big changes, big shifts. So it's actually difficult to find some background for trading even on the hourly chart right now. It's a few things and a few thoughts that we could take a look at it. And first of all, speaking on euro currency, this is for our time frame chart. Recall what was said in the weekly report that probably market stands at resistance. We have the daily stretch pattern, bearish stretch by the Chudnapple, combination of the strong resistance and daily overbought that should trigger some downside action. So actually, as a double repo pattern that has been formed later, as we also discussed and confirmed right here with this bar, actually is working, so it's pushing price lower. But this is of course not the way how usually market should behave after the double repo, because double repo is the really drastic pattern. It happens when the bulls acknowledge its defeat and just lose the positions and bears take the control and push market low. So when the bulls actually fail to pass market through the previous top. And here actually we do not see the attempt to push price through the top, and actually it will be some kind of the light kind of the double repo. Following action is also could be treated mostly like bullish rather than bearish, because market shows very gradual slow pullback out from the strong resistance area. It stands tight, and with these circumstances it is not very I don't have a lot of desire to take the short position with the price performance that we see here. So if you're taking position on the double repo, that's okay. Probably you could fix some result or even move stops to the break even, see what will happen next. Maybe situation change later. It's because this also might be the sign of the expectation, some waiting for something. There are two actually major events to wait this week. First one is the CPI today later in the session. That could also add some fuel to the downside action if it will be stronger than expected. And second, which actually many people forget about, tomorrow we will get the release of the Fed meeting report. So Fed meeting minutes will be released tomorrow. And that also very important. Who told about what the members of the Fed told about, who said something definite in favor of the rate change and so on. So what's really subjects have been discussed in the meeting. This also could bring some volatility in the market. Usually in recent times it has significant impact on the short-term price behavior. So these two moments. Until that happens, currently guys, it is not very comfortable to take the long position as well, because market actually stands very close to the previous top. It's right here, and this is the same resistance and confluence, and actually stretch is almost done. As you can see, the trend oscillator returns back to the zero area. So and you need to wait for some bit stronger pullback to consider taking the long position. Taking the short is also not very attractive, is because if you would like to, it's also the chance to go short right here, but at this moment with this type of action to the downside, it's also not very comfortable to do this. So besides, if we'll take a look at dollar index, so we even could see a bit better. As you can see, after the collapse you have this kind of the flag consolidation after the reaching the oversold. This type of action is usually continuation one, and it leads to in the most cases for downward continuation. So if of course fundamental statistics data will not bring some really big driving factors that led market to start climbing. That's what about the euro currency. On the New Zealand dollar, guys, this setup that we have discussed recently has not been realized. As you can see, this market hasn't followed the three drive pattern that we discussed on the hourly chart and just keep going higher right to the XOP target that we have discussed recently. So in this situation, we can't anymore rely on the butterfly. But at the same time, the concern with the uncompleted XOP target still stands on the market, and well, just I'd suggest that sooner rather than later it should be completed. In what manner it will happen, from what level, we will see, but that another spike downs, not downward direction should happen. Well, currently chances for that stands very high. From that standpoint, we could consider for two moments. First of all, currently market stands at the resistance, so this is the COP of this ABCD pattern, 50% resistance 67.10, but on the New Zealand dollar, the major value not in the 50% level, but mostly on the retesting of the previous lows. And this is the first area that we also need to keep an eye on with the today-tomorrow session, because here some bearish patterns might be formed, and maybe market will start moving to the downside. Alternatively, if market still will have some power to complete this ABCD pattern, the great chance to consider possible reversal will be around 67.50. This will be agreement with the major 618 resistance level. So if you're here, as usually, we have the two options. So first is either just wait for a major setup, and when the market will complete the major potential points where at least the pullback will happen, that will be relatively safe. Trying to take the short position, because some respect, some minor, at least 30% pullback probably should happen here. Or if you're ready to, you could consider price action around this area. If market will form some bearish patterns, you could try to take some part of your position around 30%, 40%, then see what will happen. It will go higher and more in this area. Because currently on the hourly chart, if we'll take a look at it, we have another ABCD pattern that's been completed on the hourly chart. This is actually, by the way, the XOP of our ABC bottom pattern that we discussed yesterday. And also here something might be formed, especially with the CPI report and with the Fed minutes released tomorrow. So that's actually a few moments, a few thoughts that we could take a look at within the couple of sessions on the New Zealand dollar as well.